ready to explore the world of high finance and ethics.
Absolutely.
Today we're diving deep into a fascinating topic with the help of Maureen O'Hara's book, Something for Nothing, along with some real-world examples.
Looking forward to it.
So how can financial tools like arbitrage be used for good and bad, sometimes even leading to scandals?
Well, it's quite a journey into modern finance where innovation and risk are intertwined.
Makes sense.
We'll unravel mechanisms behind simple concepts and their impact on society.
Okay, let's begin with arbitrage.
Sure.
Buying low, selling high sounds simple enough, but in finance it can get really complex with things like derivatives and swaps and synthetic securities.
Right.
How do we even begin to understand all that?
Imagine investors are looking for AAA-rated corporate bonds,
Oh,
but there just aren't enough available.
I see.
So what do? We
Okay.
can create synthetic versions of those bonds using instruments like credit default swaps. It's like building a financial replica that mirrors the cash flows of the original bond without the issuing company needing to be directly involved.
Whoa.
Yeah,
Creating a bond without the actual issuer.
that's right.
It's like magic.
It is pretty amazing.
But does this create opportunities for maybe manipulation?
It can. That's where ethical considerations become really important.
Right.
The book, Something for Nothing, dives into this.
Okay.
It argues that modern finance, while it can do a lot of good, can also be misused
Oh.
for personal gain at the expense of society.
And speaking of cautionary tales,
Yeah.
the book uses a case from the 90s.
Oh, yeah.
Gibson greeting cards versus Bankers Trust.
Okay.
A complex swap agreement that heavily favored Bankers Trust ended up costing Gibson Greetings millions.
Wow.
So how does that happen?
It illustrates a really important point,
What's that?
that the opacity and complexity in modern finance can often obscure the full effects of these transactions.
Right.
So sometimes it's hard to even see where the ethical boundaries are.
So just understanding how these financial instruments work isn't enough.
Not really, no.
We also need to understand the motivations and potential consequences.
Precisely.
The why behind the what.
Exactly. The book actually suggests that actions driven by things like deception
Okay.
or exploiting complex systems for an unfair advantage are ethically suspect.
And it looks like we have a few examples of that.
We do.
Starting with Lehman Brothers,
Okay.
a key player in the 2008 financial crisis.
Yes.
Their collapse revealed this tactic they used called Repo 105
Right.
to temporarily erase billions of dollars of debt from their balance sheet.
It was basically a way to make their financial picture look better than it was.
Oh,
Mislead investors and regulators.
even if it was legal, is that ethical?
That's the question, isn't it?
To manipulate perceptions like that, especially during those critical times?
Yeah.
Then there's Merrill Lynch,
Right.
another big player in the subprime mortgage meltdown.
Mm.
Their subsidiary Countrywide played a big part in flooding the market with subprime mortgages,
They did.
often ignoring their own lending guidelines.
And then packaged those risky loans into securities and sold them off to investors.
Oh, wow.
So they basically got rid of the risk, but kept the profits.
It's passing the buck, isn't it?
It is.
But ethically speaking, if they knew those loans were shaky,
Right.
was it okay to keep selling them?
It's definitely a big question.
Especially with all the potential harm to investors.
And to the whole market.
And then there's Goldman Sachs and the Abacus deal.
Oh, the infamous Abacus deal.
This synthetic CDO transaction that had so many ethical red flags.
It did.
They helped hedge fund manager John Paulson choose assets he thought would fail,
Right.
and then sold the CDO to investors without telling them about Paulson's involvement.
So Paulson was profiting if the CDO failed, but Goldman was selling it to investors who wanted it to succeed.
That's a pretty big conflict of interest.
Yeah.
And there were even internal emails from Goldman expressing concerns. There were. About the complexity and lack of transparency.
Yeah, they knew.
And all this while, Goldman was making tons of money from Paulson for structuring the deal.
It makes you wonder about their motivations.
So even within Goldman, some people had doubts.
They did.
It really highlights the importance of ethics within these big institutions.
It does.
Making sure profit doesn't just completely overshadow responsible behavior.
Absolutely. Now let's get back to a case before the 2008 crisis.
Oh,
Bernie Madoff's market-making operation.
Madoff.
It was a remarkable example of exploiting loopholes for personal gain.
Right, the architect of the largest Ponzi scheme in history.
Exactly, but he wasn't just a con artist.
Oh.
He was also a very innovative financier.
Huh.
He was really good at using regulatory gaps and tech advantages to his benefit.
How so?
He used arbitrage to divert retail orders from the NYSE to the Cincinnati Stock Exchange,
Interesting.
offering faster execution speeds and lower costs by using minimum tick size regulations.
So he was bending the rules without breaking them.
Pretty much.
But did that create an unfair playing field?
Potentially.
Was it ethical even if it was legal?
It's a big question to think about as we look closer at these ethical complexities.
For sure. Now let's move on to another market manipulation case.
Right?
JPMorgan Chase, and how they took advantage of the California electricity market.
Right. JPMorgan.
They found loopholes in California's complex system,
They did.
but not to sell electricity,
Though.
to collect payments.
That's right. It's a strange one.
It sounds like they were getting paid for not doing anything.
Pretty much. A subsidiary of theirs, JPMVEC, came up with these strategies.
What kind of strategies?
Bidding strategies to trigger payments for adjusting their power plant's output.
Okay.
And they used bid cost recovery rules to their advantage.
And they got away with this.
Well, eventually, the California Independent System Operator caught on.
They did?
Yeah.
Yeah.
Uncovered 12 of these tactics that cost them over $100 million.
Wow, so JPMVEC was playing a risky game,
They were.
using the system's complexity to profit.
Yes.
But was it ethical?
That's the question, especially considering that it could have meant higher energy costs for consumers.
It does make you think about their responsibility to the market.
It does.
Okay, now let's look at another case involving Goldman Sachs.
All right.
This one is about their ownership of Metro International Trade Services,
Okay.
a company that controlled a bunch of aluminum warehouses.
Yeah, the aluminum warehouse situation.
They essentially cornered the market,
Right.
created a shortage to drive up prices.
Exactly.
How did they even do that?
Well, they gave incentives to aluminum owners to store their metal in Metro's warehouses.
Okay,
And they took advantage of a really obscure LME rule.
an LME rule.
Yeah, about moving aluminum out of warehouses.
I see.
And to top it off, they were even moving aluminum around within their Detroit facilities, just
Wow.
creating a whole lot of controversy.
That sounds like a mess.
It was. They were accused of manipulating the market.
Wow.
It even led to LME rule changes, Senate hearings, lawsuits.
It seems like every time a financial giant tries to game the system,
Right.
it ends up hurting others.
It often does.
So was it really okay for Goldman to do that?
Well, it definitely brings up some ethical questions, especially when it comes to market prices and other participants.
Now let's talk about high-frequency trading,
Okay.
where speed is everything, and the lines between ingenuity and manipulation can get blurry.
Very blurry.
Algorithms battling it out in the financial markets at lightning speeds.
It's a whole other world.
Sounds a bit like science fiction.
It kind of is, but high-frequency trading, or HFT, has really changed things in finance.
I can imagine.
Some strategies are beneficial.
Like what?
Like market making, it can actually improve liquidity and price discovery,
Okay.
but some raise ethical concerns.
Oh, I see. Can you give us an example?
Sure, there's something called spoofing.
Spoofing.
It involves placing and then quickly canceling orders to create a false sense of demand or supply in the market.
So tricking others into making moves that benefit the spoofer.
Exactly. It's like a financial head fake.
No, wow. What else?
Layering is another one. Placing multiple orders at different price levels to make it seem like there's more depth in the market than there really is.
So it's all about disguising their true intentions.
That's right. And these practices raise a lot of questions about fairness and transparency, especially when speed and information access can give some a big advantage over others.
I bet regulators have a hard time keeping up with all of this.
They do. They've been trying to combat spoofing and other manipulative HFT practices,
I can imagine.
especially after the Dodd-Frank Act.
Right. But how do you even define spoofing?
That's the hard part.
It's got to be tough to tell the difference between a legitimate trading strategy and intentional deception.
It is, but there have been some big cases.
Like?
Panther Energy Trading and Michael Kossia, for example.
What happened there?
He was charged with spoofing
Oh, wow.
and actually ended up going to prison.
So they're not messing around.
No, it sends a message.
It does. But are there other ethical concerns with HFT beyond spoofing and layering?
Oh, absolutely.
What kind?
The very nature of HFT raises questions about fairness.
How so?
These firms invest a ton of money in technology.
Right.
They strategically place their servers near exchanges and get access to these expensive data feeds,
Right.
all to gain a speed advantage.
That makes sense.
It creates a situation where access to information and speed can be a major barrier for smaller players and individual investors.
It sounds like whoever has the most money and the fastest technology wins.
It can feel that way.
So does that undermine the whole idea of a fair market?
It's a debate that will likely continue as technology keeps advancing.
I'm sure it will. Now let's look at a case that shows how complexity and a lack of transparency can lead to financial trouble.
Okay.
Toxic loans and French municipalities.
Right, the structured loans.
It sounds like they were setting themselves up for disaster.
This case involves Dexia.
Dexia.
It was a financial institution that specialized in providing these really complex structured loans
Okay,
to municipalities in France.
I see.
These loans started with low interest rates.
Oh, sounds good.
It does. But the rates could skyrocket later because they were linked to financial indices.
So it was like they were hiding the true cost.
In a way, yeah.
So what happened?
Municipalities ended up struggling as those rates increased.
Of course.
Some even accused Dexia of not properly explaining the risks.
That seems irresponsible.
It does. But it also raises a question about the municipality's responsibility.
What do you mean?
Did they fully understand the risks before signing those agreements?
It seems like both sides have a responsibility to be honest and transparent.
You do.
But when these financial instruments are so complex, it often benefits the institution selling them.
It does.
It highlights the need for everyone to understand finance better, especially those making decisions about public funds.
For sure.
Okay, let's go back to the case we started with.
The one about Greece and Goldman Sachs.
That's the one. Now that we've looked at all these other cases, where does Goldman's involvement with Greece fit in?
Well, as we said before, Goldman Sachs helped Greece with some complex financial transactions
Right.
that masked their actual debt levels.
Which allowed them to join the Eurozone.
Exactly. But then, of course, we had the European sovereign debt crisis.
Right, and then everything fell apart.
Yeah.
And people started pointing fingers at Goldman
They did.
for helping Greece deceive the market.
That was the accusation.
But Goldman said they were following the rules.
That's what they claimed.
So it's another situation where even if something's legal, it doesn't mean it's ethical.
Exactly.
And their actions had huge consequences
They did.
for Greece and for the whole Eurozone.
That's right.
It makes you think about the responsibility these big financial institutions have,
It does.
especially when they're advising governments.
For sure.
And it also shows how our perception of what's ethical can be influenced by what happens in the end.
It's true. There's a concept called outcome-dependent ethics.
Oh, tell me more about that.
Basically, people tend to judge how ethical something was based on the results,
Interesting.
not the intent.
So if things turn out well, we don't worry too much about whether it was ethical or not,
Pretty much. But if it goes badly, we're quick to condemn it.
even if the intentions were good.
Exactly.
So it's all about hindsight.
In a way, yeah.
It seems like we need to be more objective when we're thinking about ethics and finance.
We do.
Now let's talk about behavioral ethics.
Right.
How psychological biases and our own limitations can influence our ethical decisions in finance.
It's a fascinating area.
I bet it is. It's amazing how our minds can trick us,
It is.
especially in a field as complex as finance.
That's right. One common bias is that we tend to overestimate our own ethicality
Oh, okay.
while underestimating everyone else's.
So we think we're more ethical than other people.
We tend to, yes.
Interesting. And why is that a problem?
It creates this gap between our values and our actual behavior
So we say one thing.
and do another.
That makes sense. It's like we see ourselves in a better light than we see others.
It's a very human tendency.
And I bet it's pretty common in finance,
It is.
where people might justify actions that seem questionable to those outside the industry.
Exactly. It makes it harder to encourage ethical behavior.
So what else can affect our ethical decision-making?
Well, there's also outcome-dependent ethics.
Right, we talked about that earlier,
We did.
where we judge how ethical something was based on the outcome.
That's right.
So maybe that's why Goldman Sachs got so much criticism after the Greek debt crisis.
It's possible.
Their actions were seen as more unethical because things turned out so badly.
It's a plausible explanation.
It seems like it's really hard to be objective about ethics when there are so many factors involved.
It is. And often things are outside of our control.
So how do we make the financial system more ethical?
It's going to take a multi-pronged approach,
Okay.
focusing on education, regulation, and a shift in the culture within the industry.
So we need to start with the people who work in finance.
Yes, we need to give them more than just technical skills.
Right.
We need to make them more aware of ethical issues.
So they're not just thinking about profits.
Exactly. They need to see the bigger picture
and understand that their decisions can have a big impact.
on society as a whole.
That makes sense.
Yeah.
And what about regulation?
Regulation is important for setting boundaries
Okay.
and discouraging bad behavior.
But rules aren't always enough.
No, we need to move beyond just ticking boxes.
Right.
We need to encourage a culture where ethical conduct is valued.
So it's not just about following the rules.
Right. It's about doing the right thing because it's the right thing to do.
And that benefits everyone.
Exactly.
Now, what about individuals?
Individual.
Can we, as investors and consumers, really influence the financial system?
Absolutely.
How so?
By demanding transparency from institutions, asking tough questions, and holding those in power accountable.
So we need to be more active and informed.
Exactly. We need to recognize that we have a voice and use it.
It's not just about leaving it to the experts.
No, it's about taking responsibility.
And demanding better.
Exactly.
So what can we actually do to promote a more ethical financial system?
Well, first, we need to focus on financial literacy.
Okay.
We need to give people the knowledge and skills to understand complex financial products and transactions.
So they can make informed decisions.
Exactly, and protect themselves.
Length location.
Right. We need to make sure everyone has the tools and understanding they need to participate in the financial system ethically.
That makes sense. What else?
We also need to advocate for greater transparency.
In the industry as a whole.
Yes. We need to demand clear and easy to understand disclosures from these institutions.
So we can really see what's going on.
Exactly. That will help us make better decisions and hold them accountable.
And build trust.
Exactly.
So it's about shedding light on all the complicated inner workings of the financial system.
It is.
What else can we do?
Well, we can support organizations that are fighting for ethical finance,
Okay.
engage in conversations about these issues,
Right.
and hold both individuals and institutions accountable for their actions.
So it's a group effort.
It is.
We all have a role to play.
Exactly. Creating a better financial system.
That benefits everyone.
Yes.
It's a good reminder that even though the financial system seems huge and impersonal,
Right.
it's ultimately made up of individual choices.
It is.
And we can influence those choices
Yeah.
and move towards a more ethical future.
Absolutely.
Our minds can really play tricks on us, can't they?
They can,
Especially when we're trying to make ethical decisions.
especially in a field as complex as finance.
Right, exactly.
One bias we see a lot is people overestimating their own ethicality.
Oh, really?
And at the same time, underestimating how ethical other people are.
So we think we're better than everyone else.
Kind of, yeah. It creates this gap between what we say we believe.
And what we actually do.
Exactly.
So is that why sometimes it seems like financial professionals justify actions that seem questionable?
It could be part of it.
To everyone else, I mean.
Yeah, it's a challenge trying to foster a truly ethical conduct in these institutions.
I can imagine.
And then there's outcome-dependent ethics.
Oh, right, where we judge something based on the outcome, not the intent.
That's it.
So is that maybe why Goldman Sachs got so much heat after the Greek debt crisis?
It's possible.
It's like their actions were only considered unethical because things went so wrong?
It's a valid point. It shows how hard it can be to be truly objective about ethics.
Right. Especially in finance, where so many things can affect the outcome.
Absolutely. There are so many factors beyond anyone's control.
So how do we even begin to create a more ethical financial system?
It's going to take a lot of work.
Okay.
We need to focus on education, regulation, and changing the culture within the industry itself.
Okay, so starting with education.
Yeah. We need to give future financial professionals more than just technical skills.
Right.
We need to teach them to be ethical.
So they're thinking about more than just making money.
Exactly. It's about seeing the bigger picture and recognizing the impact their decisions can have.
On the world around them.
Precisely.
Okay, and what about regulation?
Regulation is crucial for setting those boundaries
Okay.
and preventing unethical behavior.
Right.
But we can't just rely on rules alone.
We need to go deeper.
We need to move towards a more principles-based framework.
Okay, so ethical conduct isn't just a box to check off.
It has to be a core value.
It's about doing the right thing because it's the right thing to do.
Exactly.
Now, what about the rest of us? Can everyday people like investors and consumers make a difference?
I think so.
How?
By demanding transparency from financial institutions, by asking the tough questions, and by holding those in power accountable.
So we need to be more involved.
Yes. We need to be informed, and we need to use our voices.
Because we actually have power.
We do. More than we realize sometimes.
It's about taking responsibility for the system.
And demanding better from it.
So how can we do that?
Well, one way is to focus on financial literacy.
Okay.
If people understand these complex products and transactions better,
Right.
they can make more informed decisions.
And protect themselves from being taken advantage of.
Exactly. We need to empower people to participate in the financial system ethically.
So like that.
And we need more transparency.
Across the entire industry.
Yeah. We need to push for clear and simple disclosures from financial institutions.
So we can understand what's really going on.
Exactly. It will help us make better choices, and it'll hold those institutions accountable.
And that builds trust.
Absolutely. It's about shining a light on how things work.
So are there other things we can do?
We can support organizations that are pushing for ethical finance.
Okay.
We can have conversations about these issues.
Get people talking.
Yes. And we can hold both individuals and institutions responsible for their actions.
So it's not just about pointing fingers.
No,
It's about working together to create something better.
it is.
It's a reminder that even though the financial system can seem so big and impersonal,
Right.
it really comes down to individual choices.
In the end, it does.
And we have the power to change those choices
We do.
and move towards a more ethical future.
We can.
We're back for the final part of our exploration into ethics and finance.
It's been quite a journey.
It has. We've seen some amazing innovation, but also some pretty questionable conduct.
We have.
So where do we go from here? How do we actually create a financial system that works for everyone?
Well, I think we need a multi-pronged approach.
Okay.
Education, regulation, and a real shift in the culture of the financial industry.
So we need to prepare future financial professionals to think about ethics.
Absolutely. Give them the tools and the awareness to make responsible decisions.
So they're not just focused on the bottom line.
Right. They need to consider the broader impact of their actions.
And understand they have a responsibility that goes beyond just making profits.
Exactly. A sense of stewardship, if you will.
I like that. So what about regulations? What role do they play?
Regulations are important for setting clear boundaries
Okay.
and deterring unethical behavior.
Right. They're like the rules of the game.
But we need to move beyond just a list of rules.
So it's not just about checking boxes.
It's about fostering a culture where ethical conduct is a core value.
Where people are motivated to do the right thing,
Because it's the right thing to do.
not just because they have to.
Exactly. Now, what about individuals? Can regular people really influence the financial system?
It can feel like a David and Goliath situation sometimes.
I understand that. But I truly believe individual actions collectively can make a difference.
How so?
By demanding transparency from institutions.
Okay.
By asking the tough questions.
Not being afraid to speak up.
Exactly. And by holding those in power accountable for their actions.
So we need to be more active and informed participants in the system.
We do. We need to recognize that we have a voice.
And that we can use it to demand a better system.
Absolutely.
Yeah.
So what are some concrete steps we can take?
I'm all ears.
Well, financial literacy is crucial.
Right. Empowering people with knowledge.
Exactly. The more people understand these complex products and transactions, the better decisions they can make.
And the less likely they are to be taken advantage of.
Precisely. We need to equip everyone with the tools to navigate the financial world ethically.
Makes sense.
What else?
Transparency is key.
We've talked about that before.
We have, but it's really important. We need to demand clear and simple disclosures from financial institutions.
So we can see what they're really doing.
And hold them accountable.
And build trust in the system.
Exactly. It's about shedding light on those often opaque practices.
Okay, what else can we do?
We can support organizations that are promoting ethical finance.
Good idea.
We can talk about these issues.
Raise awareness. Yes, and we can hold both individuals and institutions responsible for their actions.
So it's a collaborative effort.
It is. It takes all of us working together to create a more ethical and responsible financial system.
It's a good reminder that while the financial system can feel vast and impersonal, it's ultimately driven by people.
By the choices we make.
And we have the power to make better choices.
We do.
To push for a system that aligns with our values.
And benefits everyone.
So let's recap some of the key insights we've discussed.
Absolutely. Here are 10 takeaways to keep in mind. 1. Arbitrage is a powerful tool for innovation, but it also presents ethical challenges. Always be aware of potential manipulation. 2. Ethics are inseparable from financial decision-making. Consider the societal impact of your choices, not just the potential profits. 3. Complexity can be dangerous. While intricate financial instruments can drive progress, they can also mask risks and create opportunities for exploitation. Seek clarity and understanding. 4. Transparency is essential. Demand clear disclosures from institutions to make informed decisions and hold them accountable. 5. Conflicts of interest are everywhere. Be aware of them and advocate for regulations that address them. 6. Financial literacy empowers everyone. Invest in your financial education and support initiatives that promote it for others. 7. Regulation is crucial for setting boundaries and preventing unethical behavior. Push for a principles-based approach that encourages a culture of ethical conduct. 8. Individuals have a voice. Use it to demand transparency, ask tough questions, and hold those in power accountable. 9. Support organizations that champion ethical finance. Engage in discussions and promote positive change. And 10. Remember that building a more ethical financial system is a collective effort. We all have a role to play.
That's a great list. Thank you for sharing your expertise with us.
It's been my pleasure.
And to our listener, thank you for joining us on this deep dive into the ethical complexities of modern finance.
We hope you found it insightful.
Remember, your choices matter. And together, we can create a financial system that truly reflects our values and serves the greater good.
Let's use the power of finance wisely, ethically, and for the benefit of all.
On that note, we conclude our exploration. Keep exploring, keep questioning, and keep your ethical compass pointed in the right direction.